Hey y'all, this is Serena with Heaton Bennett Insurance and host of the Premium Perspective, our podcast where we spotlight professionals across Central Texas and share insights that help you protect what matters most. Today I'm breaking down one of the most common questions I get when it comes to life insurance. What's the difference between term life and whole life, and which one is right for you? Don't worry, I'll keep this simple, clear, and totally jargon-free. So, term life insurance. Think renting coverage. Term life is like renting insurance for a specific period, say 10, 20, or 30 years. You pay a monthly premium, and if you pass away during that term, your beneficiaries get to pay out. If the term ends and you're still living, the policy usually expires. No cash value, just peace of mind during those high responsibility years. Why people choose it? It's very affordable, especially for younger people or families on a budget. It's great for temporary needs like paying off a mortgage, raising kids, or covering debt. You can often get a lot of coverage for a lower monthly premium. Now, whole life insurance, think owning a policy that grows. Whole life, on the other hand, is permanent. It lasts your entire life, and it also builds cash value over time. That means part of your premium goes into a savings account that grows slowly, so you can even borrow against it later in life. Why people choose it? It guarantees a payout no matter when you pass away, as long as premiums are paid. It can be used as a wealth building tool or to leave behind a legacy. Some use it to cover final expenses, estate taxes, or even to fund a child's education later. But here's the catch. Whole life costs a lot more than term, sometimes 5 to 15 times more. And unless you have a specific financial strategy or a long-term goal, many people start with term first and then layer in whole life later once their income grows or their needs change. Here's a real life example. Let's say you're 30 years old with a young family. You might grab a 20-year term policy or $500,000 to make sure your kids are covered if something happens to you. It could cost you less than your monthly cell phone bill, but maybe later when the kids are grown and you've built more savings, you decide to add a small whole life policy to lock in lifelong coverage. And that cash value becomes part of your retirement plan. So here's the bottom line. Term equals simple, affordable, and great for covering temporary needs. Whole life is long coverage with savings, but a bigger investment. So choosing the right one depends on your stage of life, your goals, and your budget. If you're not sure what you need, that's what I'm here for. We'll ask the right questions and help you find a policy that protects your people without overcomplicating things. Be sure to subscribe for more real-world insurance advice and send this video to someone you care about. You might help them make a decision that changes their family's future.